Good morning, everyone. Welcome to this session dedicated to fair payment to SMEs. My name is Antonella Correra. I'm a policy officer in the European Commission in DG GROW. I'm dealing with the implementation of the current late payment directive and the review of the legal and policy framework. I also take the opportunity to welcome also our guests that are following this event online. Today we will present the highlights of our annual report of the European Payment Observatory. I take the opportunity in presenting this report to thank the people that have made this report possible, so the team that is behind the observatory. Some of them are here today, Cinzia, Gabriele, Bea, and all the team that is in Brussels. Thank you for your work, and especially a big thank you also to SMEA. And our SMEA man is there, Iker Ayerbe, so thank you very much, Iker, also for all your support for this project. Today, as I said, Cinzia will give us the highlights of the report. It is a particularly rich and interesting report, I have to say, but more details will be given by Cinzia later. Then we will have a discussion with two distinguished guests, a panel discussion, and we will have hopefully a question and answer if time allows, so to have a discussion. But before we move on with the session today, I'd like to give the floor to a very special guest. Is a member of the European Parliament, Mrs. Laura Bayerin. She is the S&D coordinator in the IMCO committee in the European Parliament, and she's also the vice president of the SME Intergroup.
Dear all, it is a great honor to speak to you in my capacity as Vice President of the SMEs Intergroup and S&D IMCO Coordinator in the European Parliament. First of all, I would like you to sincerely thank you for the invitation to this very important SME Assembly, hosted this week in Copenhagen under the Danish presidency of the Council. As you know, every year between 18 and 40 billion invoices are issued in the European Union, more than 500 per second, and nearly 50% of them are paid late. Late payments directly affect liquidity and the predictability of cash flows. This undermines competitiveness, reduces productivity, increases the risk of insolvency, and creates barriers to growth for SMEs and self-employed, which depend particularly on regular and predictable cash flows. The directive on combating late payments was adopted in 2011 with the goal of speeding up invoice payments in business-to-business transactions and thereby protecting, in particular, small and medium-sized enterprises from situations where waiting too long for payment could negatively affect their cash flow. On 12 September 2023, the European Commission published its long-announced proposal that would repeal the 2011 directive on late payments and replace it with a regulation. The IMCO report was approved by a great majority in the European Parliament in April 2024. Since then, the proposal has been pending in the Council, with several member states calling for it to be withdrawn and replaced by a revised version of the existing directive. Despite this, EVP Séjourné was repeatedly shown his commitment to maintaining the proposal because the problem has not at all disappeared. On the contrary, between July and September 2025, the Commission launched an SME survey on late payments, and the results were still alarming. 73% of companies identify late payments as a serious problem. For 30% of respondents, it is a systematic problem. 52% of companies reported unilateral extension of payment terms, and 40% that such delays limit their investments and growth capacity. This data clearly shows that late payments remain a major issue for SMEs across Europe. In this regard, I very much welcome the decision of the European Commission not to withdraw the revision of the directive from its 2026 work programme. However, more needs to be done to unblock the situation and to deliver a truly European response to this problem, which continues to affect our local economies, our small and economic actors. the Commission and the Parliament have demonstrated their willingness to work together on the necessary revision of the Late Payments Directive. And we ask the Council to engage with the legislative procedure and find a position that allows us to move forward. We need to continue negotiating to achieve a text that strengthens this directive and adapts it to the challenges and difficulties that SMEs across Europe are facing today. Thank you once again, and I wish you a very fruitful discussion over these days in Copenhagen.
Thank you, Mrs. Ballerin. I think she set the right tone for today's discussion. And already in her speech, she was already giving some figures of the situation of payment performance in the EU. But I think we have a person that can illustrate how is the situation. So I invite you to come and to join the discussion. Mrs. Cinzia Alcidi. Cinzia is the Senior Research Fellow and Head of the Economic Policy and Jobs and Skills Unit at CEPS. Cinzia, thank you very much for being with us today. And I'll leave you the floor to you and with your results. Cinzia will introduce you with the main highlights of the report. And I wanted to tell you that we have a copy of these highlights available for all of you that you can take home with you. Thank you very much.
Thank you very much, Antonella, for the introduction. So at CEPS, I lead the consortium who is in charge of setting up the observatory and conducting the monitoring of late payments. We work very closely with the European Commission, SME, but also with the stakeholder forum, which for us it's key. The stakeholders are key partners and actors in trying to monitoring late payments because they help us with qualitative and quantitative information, which, as I will repeat several times throughout the presentation, is a key challenge for actually getting good understanding of where we stand with late payments. So it has become a tradition to be at the SME Assembly, and it's a great pleasure. So we started in Bilbao 2 years ago. Last year we were in Budapest, and it's really a great pleasure to be here in Copenhagen today. So let me start with some key findings, which are based on new data, mostly coming from a big survey that the ECB and the European Commission conduct every year. This is called SAFE. This is the survey on access to finance of companies. And there is one key question in this survey, which basically asks companies whether they have faced the issue due to late payment over the previous 6 months. And we have now data for 6 years, and the trends are quite interesting. First of all, we had observed a small but still interesting decline, strangely enough, maybe during the COVID period. And then the situation started to deteriorate, and the deterioration has been quite steady. And basically, the last observation points to more than half of the companies basically stating that they had to face issues with late payment over the last 6 months. Now, such a trend is confirmed by another source. This is Intrum. Intrum is a private company. They offer service for management of payments, and they conduct every year their own survey. This is quite extensive, and basically they share information about payment periods and payment terms, both for G2B and B2B. And also in this case, information is particularly interesting. As you can see, both periods and terms are quite long, and they hover around 60 days. Now, what is also very interesting is that both periods and terms are higher for G2B than for B2B. So governments do not appear to be good payers. And also trends are quite interesting. So we basically observe that there has been a slight decline compared to 2023 for B2B, both in the terms. So we moved from about 45 days to 43 days for the terms. And for the periods down from almost 62 days to around 60 days, so still quite high, but a declining trend for B2B. By contrast, when we look at B2B, there has been an increase. And actually in the terms, this is not just this year. Basically, you see that there is a progressive increase since 2020. Where days basically moved from about 51 to almost 56 in terms of terms, and the same also for payments. So this is not necessarily very encouraging finding. And then this year we also had the possibility to rely on another source, which was mentioned by MEP Bayarin, which is an ad hoc survey which was conducted by the Commission. This is an expanded sample of the SME panel. And there is quite a lot of information, and a lot of details will be contained in our report, which will be published, full report, which will be published in a few weeks. But there was one specific question which was about the introduction of mandatory payment terms. And basically, what we get from the survey is that on average, about 60% of the respondents are in favor of introducing a mandatory maximum payment deadline, with about a quarter asking for sector-specific flexibility. And within those who actually favors a mandatory limit, about a third would be in favor of 30 days. Some other stylized facts relate to the size and the sector. And for the size, actually, we have a confirmation of a trend which has been systematic over the entire period for which we have data, and is that size matters. And in particular, there is a correlation between, an inverse correlation between the size and paying on due time. So if you look at the bar chart on the right in the upper part, it's quite complex, but actually there is a very straightforward message, which is basically saying that micro companies, which is the yellow bar, is systematically higher than all the other bars, which means that the share of micro companies paying on time is systematically higher than for large companies. And actually, the larger the size, the less on-time invoices are paid. At the same time, we also know that the smaller the company is, the greater the problem of late payment is as well. So basically, micro companies are those for which the issue is more extensive, and at the same time, they are the ones who pays more on time. When it comes to the sector, actually patterns are less clear-cut. Basically, until last year, we had some sectors which were systematically expressing issues with late payments, for instance, construction, mostly due to the fact that they have long value chains, and some sectors which were performing systematically quite well, the finance sector. This year, the picture is much more complex, and basically, the key message here is that country differences seems to be more important than sectoral differences. So in some sectors, you can find the best and the worst depending on the country where they are located. So this also points to the fact that the culture of payment is probably much more important than the sector in identifying clear-cut patterns. Now, speaking of culture, which has been identified as one of the drivers of late payment, and over the last years, actually, we have conducted quite a lot of in-depth research on this and how this can be improved. In the report, we have been looking at other drivers of late payments. And what it emerges in a very clear way this year is that the cyclical factors are going to weigh very strongly. And this is very concerning because it means that next to cultural or more structural issues, we may see next year, especially increasing cyclical factors waiting on late payments. And basically from the survey, what we get is that more than half of the companies are actually concerned about the fact that they may face difficulties in paying their suppliers on time. More than half of the companies are concerned about the fact that their clients may be paying late. And again, more than half of the companies actually report that they had to accept longer payment terms than they would be comfortable with. So this is a bit source of concern to the extent to which cyclical factors may put additional strain on companies when it comes to payments. And one of the reasons of concern is that basically what we know, and this is also systematic findings through the years, is that late payment have a cascade effect. And very often when companies are exposed to late payment, they also tend to pay late because of the liquidity constraint that is raised. Last point, since last year we have been looking at cross-border trade. So we have been trying to identify whether there are different patterns between companies which operate mostly domestically and exporters. And what we get is that despite that the difference is not huge, exporting companies are usually faced with large issues related to late payments. And this is, and we also saw that there is a difference between companies which operate mostly within the EU and those who export outside the EU. And for the latter, the problem seems a bit bigger than for the former. And then as a last point, I would like to move to the impacts. And I think this is really very important because the whole debate about the need for policy intervention relies a lot on the fact that the impacts are significant and we need to intervene. And when it comes to impact from multiple surveys, we know that the main issue for companies which are faced with late payment is that is hinder growth and investment. Because of the cash flows impact, which can become systematic and can be act as an obstacle to grow. And this is confirmed also in this new survey, where basically 40% of companies indicate a late payment negatively affect investment and growth, and for close to a third of the respondents, actually it can be a threat to survival. Now, why is that? Besides the short-term effects on the cash flow, one key obstacle, basically, to growth and investment is access to finance. So it is a robust finding that basically companies which face late payment problems actually struggle to access finance. And based on the SAFE survey, actually almost 2/3 of companies claim that this is the case. And in fact, what we also find out is that this is a sort of a vicious circle because payments which are delayed prevent or make access to finance more difficult. And at the same time, companies which face difficulties to access finance tend to pay late. So this is a sort of reinforcing vicious circle which we need to stop. And then this year we introduced two other specific impact aspects. And one is the administrative burden. So the interim survey this year had a specific question whereby companies were asked to identify how much time is spent on chasing payments. And the results are actually quite striking, especially for SMEs. So the survey distinguished large companies and SMEs. And the results points basically to the same number. There is very, very small difference. And it's about almost 10 hours a week. So you know, this is more than 1 day FTE that companies have to devote to chase payments. And for very small companies, this is actually quite substantial. So the burden that this is entails is quite substantial, it's considerable. Over the past years, we have been looking quite a lot on at this aspect, and we also published a report on e-invoicing, because, for instance, e-invoicing can reduce the burden. So for those interested, don't hesitate to look at the Observatory website, where you can find a more in-depth study on this, and I'm sure this is a point we will come back during the conversation. Last point, quite interesting. So one of the questions is, how can we quantify in monetary terms the impact of late payments? This is a quite challenging exercise, because you know, with the amount of transactions that we have every hour, it's quite difficult to get a full picture. But basically, the French payment observatory, so the equivalent of our observatory at national level, which has access to very detailed data for French companies, came up with an estimate. And basically, they estimated that at the end of 2023, in France, almost 19 billion euros were somehow locked because of late payments. And the survey, the calculations refers to both SMEs, but what in France are called intermediate-sized companies. These are companies between 250 and 499 employees, so quite large. Actually, in France, covers quite a lot of companies, and they come up with this quite substantial number, which basically is defined as an implicit transfer from companies for which the payment is delayed to the counterpart. Now, if we use a bit of rule of thumb and we extrapolate this analysis at the European level, we come up with about 100 billion. So this is quite a substantial amount. And with this, I come to the end. And maybe as a last point, I want to say just one word about the observatory. So the observatory has been working now for 3 years. We will continue certainly to work next year. And then I think there is a question about whether the observatory will become permanent. Or maybe not. So I think I want to make the point that it is crucially important to have an instrument to continue to monitor late payments. I think the observatory managed to actually raise a lot of debate around this issue, which is quite fundamental for companies, especially for SMEs. And it's really important that we actually have access to data. I'm convinced that technological change and digitalization will help us to get more accurate data, but I'm also convinced that the key input will continue to come from the stakeholders, because stakeholders are those who deal every day with these issues, are those who identify the problems and can also help to identify the solutions. And with this, I close. Thank you very much.
Thank you very much, Cinzia. This was very, very detailed and illuminating presentation of the situation of late payment in Europe. So I think it's really following what Mrs. Ballerin said. The situation of late payments has not at all disappeared. And it's instead an alarming and systemic problem. And I think you put really the nail on the head on this problem. But I would like to continue this discussion also because, as Mrs. Ballerin said, we would really need a truly European response. And in the past, we always had, in a way, the impression that late payments, the problem of late payments was, allow me to say, a problem more of Mediterranean countries or southern countries. But as you will see that the discussion that we will have now with our two distinguished guests, you will see that this is a real European problem and also affects other countries in Europe. So I would like to call to the podium here Anders Persson and Jasper Beinhoff. Thank you. Please join us. Welcome. Thank you very much.
Thank you.
So I will start with you, Anders. Anders is the Director of Strategic Development and International Affairs from the Federation of Swedish Innovation Companies. Thank you very much for being here today. Anders, in December 2024, I saw a very interesting article that appeared all along the Swedish media, on television, on newspaper. And the article was mentioning that stock market giants, the payment behavior of stock market giants reach extreme levels, and that the payment delays of large companies have increased to unreasonable levels in Sweden. It is estimated that the amount of arrears from large companies reached the 500 billion Swedish krona for at least the 10 largest companies. Can you give me a little bit of comment of this situation, taking into account that in Sweden you have a code of conduct, how this code of conduct has worked, what about its effectiveness, and a little bit of the situation of late payments in Sweden?
Yes, of course. Thank you. Thank you for inviting me. Just to give some base, I've been working with late payment issues for 15 years, just so you know. And then also I was one of the ones taking initiative to implement a soft measure or an ethical code for companies. And actually with the agreement of I would say 12 big companies sitting at the table discussing, okay, how can we do this? How can we actually shorter the payment terms for SMEs without regulation? So that was the basis of that, and I will come back to that. But the thing is, if you compare, we have lots of big manufacturing international companies in Sweden, and if you look at them and you compare their economical performance to in comparison with other big companies around the world, they are not performing as well. But what they do actually, and they have a larger proportion of supplier credits than they have equity or interest-bearing loans. So you could actually see that there is something that is wrong. And the thing is that we often hear that long payment terms is because we need it to make the business run. But actually, and I remember this from the 90s when it started really appearing, is actually when the customer is hurting financially, they are poor performers, they need somebody to give them money and they can't find it in the venture capital from their owners, from the banks. So they go and ask their suppliers, can you please give us money? And this is how it started in the 90s. And we have a big telecom company in Sweden that actually are one of these bad performers at the moment. And not hanging out anybody actually, but the thing is, there is some systematic wrong in this, and it has to do with competitiveness. I think we sometimes hear talk about details. We talk about how bad, long or short payment terms, how effective are they, and we have lots of data on that. But the thing is, we need to look at whether or not EU is competitive compared to other markets. What measures do we need to take to actually be a competitive market? And we are not focusing on that. We are focusing on some problems and actually throwing things at each other instead of focusing on the right question. So that is my basic. But it is an enormous amount of money that is supplied by supply chains or from the suppliers, and on an unhealthy level, I would say, reaching up to maybe 30% or above that comes from suppliers, and maybe the interest-bearing loans are maybe only like 20%. and you can understand that there's something wrong in the system when you look at that. So.
Thank you. Thank you very much, Anders. You were mentioning before soft law. And I think that in Sweden you have a code to pay in 30 days. Was it effective? Did it work? Can you tell us something about this?
Yeah, I can tell. We implemented this in this dialogue with the bankers. Yeah. It wasn't voluntarily. I want to be honest about that. It was under political threat.
Okay.
Just to be sure, nothing happens without political threat. Nothing happens on this issue because actually I'm getting cheap money here, and if I get it for free, I'll get it, you know. But the thing is, we had a discussion, and some of the ministries in Sweden were also involved in this. But actually, they sat down, and the companies agreed. We did not get involved in that. We talked about it, and they came up with suggestions. But they agreed, okay, we're going to have this ethical code, and some companies signed up, and the initiative was run by a few bigger companies. Getting it so everybody could accept it. But now when I look at it, there's some of the companies that actually signed this that actually are following the code. And I'm the chair of the organization that actually have the code. And what is our thought at our board meetings? We're thinking, okay, should we just give this code back? Because we have companies signing this code with an average payment time, and I got that report yesterday, of 83 days towards SMEs. Average payment time. I got an SMS right now when I was sitting here from one of my contacts. They met a company in western Sweden yesterday, and they asked for 110 days payment. Asked for. They are not. There's not a negotiation because of the differences. So they said, well, we can't handle this because we are knowledge-intensive services companies, and we have to pay salaries, we have to pay tax, we have to pay, and we don't have that money. We're no banks, and that is the issue. And we are then focusing on the wrong issue, because I mean, how do we actually make transactions more effective in Europe? How do we make Europe more attractive for investments? And by making the transactions more effective, we will attract investments. We will attract companies that want to be on that type of market, that want to be where everything works, where you actually can, when you know where the flows, the cash flows works, and not locking so much cash into the business.
Thank you very much, Anders. You mentioned something very interesting about attracting investments and making Europe more competitive. Some questions are about, as you saw from the survey, there was a significant percentage of respondents confirmed the result that we also had in our SME panel in 2022 when we were preparing the proposal for the revision, that they would like to have more clarity about payment terms, so having clear payment terms, whatever they are, but maximum. And some might fear that this might limit the competitiveness of the EU on the global market. So with import from other non-European operators. So how do you see this? Because they might claim, okay, in global markets, they might have longer payment terms. So what is your opinion on this?
I know I'm a little worried that the strong lobby that actually working towards having the ability to actually have the suppliers supply the capital for the working capital for the bigger companies, that they actually are using some sectors to actually argue, and that is a worry. And I think the sectors that are actually part of this should actually worry themselves, because there are business models and different things. And I just sat next to a colleague here, and I said, I've been in the retail business. I've been manufacturing things in Asia, and the only thing that I got to do then was cash on delivery. There was nobody supplying me anything if I did not deliver cash at the same time I got the goods. Then the bank could go in and they could take the credit. So I could get cash on delivery 90 days, but paid by the bank. and I, in that way, I get that credit term, but even seeing, and maybe somebody can prove the difference, seeing a Chinese company sending a bill to Europe, expecting it to be paid without any grants or any guarantee for that, I don't see that. Okay. So I think actually we are, it's almost like the oil industry lobby. The strength of that lobby is so hard, and finding new arguments, and poor people, or this poor lady having this store, she's not going to survive, and then we're going to, it responds to our emotions about this poor person, but actually it's not true. And there is business models and there are business ways how to do that. And at the moment we try these voluntary ethical codes or whatever. I don't think it's ethical if you break them, but we try this. Okay, let's try something else and see how that works. And the reason why I say that is because Europe needs to be attractive. Europe needs to be a place where you want to run business. Europe can't not let United States, Asia, or other markets run the business for us. We need to be attractive here. And that means, and compared to the stock market, who would pay stock market exchange with 30, 50, 60, 80, 90 days, or 120 days? Nobody would accept that. An efficient market has efficient transaction systems. And then how we solve the different types of problems in the different areas, that's a different question. We'll solve that. But we need to get the effectiveness of transactions in between companies and between governments and companies as effective as possible. And the digitalization and AI will help us to do that. In Sweden, we have e-invoicing. Everybody does that. Everybody knows that everything is clear. So actually, you could do the payment right away. But you don't, because you want to borrow the money. And that is the only reason why you keep the money, because you want to borrow it. And I think we need to understand that, because then we can have the focus on the right issues. Okay, you want to borrow money, there's banks, there's venture capital, there's equity, there's other things to do. And we'll help to solve that. But we can't hurt each other in that measure.
Thank you very much, Anders. Jesper, so to continue the discussion, and Jesper, first of all, words of introduction. You are the Deputy CEO of the SME Denmark and the Policy Vice President as SME United. In fact, you are the chair of its Legal and Affairs Committee. So thank you very much and welcome for being with us today. Anders was mentioning very, very important issues about being competitive and late payments, effective competitiveness. And again, I also saw an article that was in the Danish media in April 2025 that was mentioning a serious deterioration of payment performance, both in government to businesses and in businesses to businesses. So what's your view about this situation? Why this deterioration also in Denmark, both in the public sector in business to business transactions, and then also if you want to comment as well on what Anders was saying about making Europe more competitive with a better and fairer payment framework.
Yeah, thank you, Antonella, and the Commission for this kind invitation. I think it's very important debate here today, because late payment in our view is not a marginal issue. It's a structural, systemic problem, as Sensia's report also showed. It undermines growth and competitiveness and trust across Europe. And the article you are referring to is quite accurate. We have problems with G2B, increasing problems. We have problems with B2B payment terms. In general, we say that we have long payment terms, but then companies, they pay. And as you saw from Sensia's slides, in that respect, we are, even though larger companies pay later than smaller companies, we are some sort of a model, but it is due to the fact that we have these long payment terms. So it is a systemic problem. And when we talk about competitiveness and improved competitiveness with the Draghi and the Letter reports, I think tackling late payment is part of the solution. It's firstly about simplification, as you mentioned from your survey. chasing invoices around 10 hours a week is a lot. That's actually a burden on companies. Some would argue, oh, if we make new regulation on late payment, it's bureaucracy and it's massive new rules. But you should contrast it to the fact that real businesses in real life, I hear that from our members all the time, are spending so much time on chasing their payment. And secondly, I think, as Anders also mentioned, it is about also competitiveness on a more larger scale. I think that the current situation with late payment, it undermines competitiveness by freezing liquidity in the supply chains, and that's a real problem. And I think also in a time where we are talking about the fragmentation of Europe and talking about the terrible 10 when combating problems with the single market, I think your proposal in the Commission addresses this fragmentation by creating incentives to go cross-border with a more level playing field, because companies know that they will be paid. Then you have your survey, if I may also mention that. I think it's very comprehensive and very interesting, and I think you can make some general deduction on this, and it is all reinforced with the presentation we heard in the beginning, that the payment culture in EU is actually deteriorating. The payment periods remain far too high, and as a new thing also in the northern countries, public authorities are actually now among the worst payers, and that is something new also with the current directive. We have a 30 days cap, so this will hit the SME, and it already hits them hardest, and it holds back investment and growth. So now we need the Council to act on this, because you put forward the proposal for regulation, and Parliament before election and after election confirmed that with some alterations they want your proposal as the path to a compromise with Council. So I think we need Council to act now. And I think the new numbers here today show the need for the Danish presidency to have another meeting in the working group in the Council. On this, they had a meeting on October 7th, and I think these new numbers, and we'll have a consolidated report within 2 weeks, you said, I think it really puts heavy pressure under the Danish presidency. And now, since we're here in Copenhagen, I could mention that the former S&D mayor of Copenhagen, post-COVID, she imposed 6 working days as payment for the municipality. 6 working days. It was in a time when people said in the municipality, oh, we can wait, we can save money. And I think the mayor, who is now minister in the Social Democratic government, she said, well, it is actually the company's money, so we have to pay within 6 days. So I think more could be done.
Thank you very much, Jesper. Thank you for these words. Mrs. Ballerin indeed said that more needs to be done because the situation is alarming. I'm just quoting her words. And relaying to what also Anders said, that other jurisdictions in the world are improving their payment framework. Just to give you an example, the UK, which has our same directive, but its public national survey concluded on the 23rd of October on the thorough review of their payment legislation. Main things include reinforcing the powers of the Small Business Commissioner, making transparency obligations for large businesses more stringent, but more importantly, setting payment terms at 60 days in business-to-business transactions with a transition in 5 years to 45 days. So the survey has just concluded. Let's see the results. But as you see, they are reinforcing their payment framework. So what, as Mrs. Ballerin said, we need to work together. The Council needs to engage. The Parliament, the Commission, we all need to work together as well with the Council. So what do you think should be done? For example, there are key crucial issues like specific payment terms for certain sectors, the maximum payment terms, enforcement, sanctions. What you think should be addressed as a priority? Anders.
Yeah, I'm going to reflect on the directive actually, because we had a little problem in Sweden when the directive came out because it stipulated 60 days, which is a major problem in a country where everybody thinks 30 days was a law. So everybody, oh, you can have it longer. And then it started to deteriorate from some bigger companies starting to do that when they got into economical problem, and it started to ask for longer payment terms. So there's a implementation, I think, is key in this, and I think also that the directive pointed out a way, and we gold-plated in Sweden, fair enough, because otherwise it would have went the other way, but its implementation needs to be strong enough or hard enough or have enough impact to actually get a movement going. Because the problem is otherwise is that if there's just small steps and we measure the average payment terms, and I can look at that if I look at the spread, we have fair payments from lots of companies, it's 35, 40 days, or it's similar, okay, and 28% of all invoices are paid, late, and we could probably work on that, but still, how long time do you actually think that you need in a digital world to pay an invoice? I mean, we're talking about a transaction. How many days do you actually think is needed to pay an invoice? And 6 days was something they said. I mean, maybe it's 1-2 days, because all these invoices we're talking about at the moment, they are already pre-booked. If you don't have the order number or the already signed paper that this is fair as a delivery, you won't even be able to send the bill. So everything is already clear when the bill is sent, and it's sent electronically and receives the customer at the same day. How many days do you think they need to be able to approve that? And that makes it very clear that this is not about payment of invoices or how long time we need to look at the invoice before. It has nothing to do with that. It's the only thing it has to do with is I want to borrow your money, and I want you to pay the interest if you want the money earlier, and make a business case out of that. So let's be fair and talk about it what it is, and not like something traditional thing like we did something in the 1800s or whatever. This is reality. It has to do about financing of working capital in bigger companies, and the SMEs being the ones financing it.
Thank you. Jesper.
Well, I think that the numbers, they speak for themselves. We need action now. And I think Commission has delivered, Parliament has delivered. Now it's up to the Council. I think a landing path could probably be that in Council, since there is such a opposition towards a regulation, you can withdraw it into your machine, make it into a directive, take into considerations some of the issues being raised by Parliament, for instance, not a rigid 30-day rule, but flexibility up to 60 days, and even more in very special, well-defined, transparent cases. There can also be a sectoral discussion. Books has been mentioned as something part of the European cultural heritage that we should cherish. We can talk about that. I think the most important thing is now that we engage in a discussion. We really need this discussion to go on now. And that's also why I think that the work being done by you guys are so important, because it qualifies as the debate on this, and I think something needs to be done now. And if not the Danes, then it will be our Cypriotic friends. We know that Greece, Cyprus, a lot of the Mediterranean countries, they also see this as a major obstacle for growth and success. But I think it's very important also not to be staring too much into the horizon, saying that a regulation will solve everything when a directive can make certain provisions for member states who have certain issues. We also know that countries like France, for instance, they have a mediation where they actually solve a lot of problems. In Holland, they have also a guarantee for small businesses to have their money. So there are a lot of existing realities in the EU 27 that we need to take into consideration. And talking about EU 27, since we're not 28, since the Brits has left us, as far as I've understood, their economies are suffering, but they are not suffering from too short payment terms. And the same goes for the US and Canada, as we discussed before. Thank you.
Thank you very much to our distinguished guests and for your contribution. That point taken. So I have taken note of your observations.
Can I add
Anders,
one thing? We have in Sweden, I think all the countries have mandatory 30-day payments in one part of the industry with fresh goods and vegetables. Mm-hmm. Has anybody heard of any company going bankrupt because of that? Mm-hmm. Has anybody heard of any company that hasn't done business after that? I don't think so. Because if you do, please contact me and tell me who it is, because I want to know that. But the thing is, simple playing rules is deregulation. Simple playing rules. Everybody knows what it's about. We'll solve it. We'll find the ways. We find the business models. We find the capital. Of course, it's going to be a challenge if at the moment now our companies are paying 6 months of salaries to our employees for something they didn't get paid for. And now we're asking the customer actually to pay the money so we can pay the salaries and the tax. Because if we don't do this, we need to change the tax regulation also, because we need to pay in tax for money we didn't receive. And we need to do something, because this is hurting Europe. And it's hurting Europe bad. And we don't understand. If you look at the measures that's done, and you mentioned UK, which is a very soft measure. Look at China and the supply chain within the automotive industry. They set 30 days as maximum. And I mean, 30 days is well enough time to be able to pay an invoice. So I think we should and we need to look outside Europe to find out why are the competitors actually hurting us, because they are more competitive than we are. We need to have the same type of economical system in Sweden where actually we can compete with. It's attractive to have a business in Europe, because here you get paid. Here, the partnerships in between companies actually works. It could be solved with culture. Of course, but if culture doesn't work, if ethical code doesn't work, if recommendation, I mean, the Commission has worked with this for 30 years. 30 years of soft measures has done nothing. Yeah. It's status quo. Okay, let's accept 30 years. I'm not going to live 30 years more. So I mean, we need to do something, and I think that is, and we can be creative in how we do that, but we need to be very clear what the goal is. We need to be competitive. We need to get the cash flows running, and we need to make better business in Europe.
Thank you very much to both. We have still a few minutes left, and I think we can give the floor. The lady here, Lina. And then the gentleman there.
Thank you. I'm Lina Whittaker from Eurocommerce, representing retail and wholesale. I think there is one thing you said about the perishable goods. 30 days is different perhaps for salad compared to durable goods that you might expect as a consumer to see on the shelf. But I noticed Cynthia's comment earlier on that said that those that find it difficult to find finance, they also may be the ones that are paying more late. And I just wondered there, with the wholesalers, one of their business models is to give supplier credit. And actually regulating payment terms would mean that they wouldn't be able to offer that credit. And they are offering different types of credit to what may be findable in the bank. And also my second question is, in terms of the survey, it looked very much from the supplier side. So will there be another survey that also looks at the buyer situation, looks at also the other ideas and the findings from the observatory in terms of the CSRD or other things like transparency, code of conduct as well?
Thank you. We take the questions and then we answer. There is a gentleman there first. And then,
I am Jean-Michel Potier from UUSC and from the CPME, Confédération des PME in France. Thank you for this very interesting discussion. I have a comment, a figure, and a question. My comment, reducing payment deadlines to 30 days, as the Commission initially wanted, will not solve the problem of late payment by large company. Above all, it's a priority matter of forcing large companies to respect legal deadline. On the contrary, that they impose on SMEs clients. For SMEs, this is a double penalty, a double punishment. One figure, according to the Bank of France, in 2024, payment conditions have decreased further, but large companies, on the contrary, have longer payment deadlines than in 2023, without respecting the legal deadline. My question, the majority of member states consider this revision to be unsatisfactory and does not meet the expectation of SMEs. To that extent, could the European Parliament's proposal be replicated by the Council of the EU? Thank you.
and we take the third questions and then we answer.
Good morning, everyone. Fernando Sicchos Jimenez. I'm the Secretary General of the European Builders Confederation, who represent construction SMEs and craft trades. I will just mention a few things that Mrs. Alcid mentioned from the report that struck me, because I remember that 2 years ago in Bilbao, in the same kind of setting at the SME Assembly, I was in the panel, lucky enough to tell people, look, late payment is a major problem for us in construction, because we are called to invest more in training, in material, in going for the renovation wave at the time we still are. And this call for help for us to be able to invest in ourselves 2 years after is still one of the main calls we're all making. We're still feeling this pressure on our investment capacity. So this is a call for actually accelerating and finding a solution, because we keep talking. You said 30 years. My window is 3 years now, and now you're worrying me even more. But then I would like to highlight one figure that we're not discussing enough, I think, from your findings, is the fact that companies on average spend almost 10 hours chasing for late payers. I really like the fact that you went to the granularity of slicing between micro, small, medium, because if you take those 10 hours and apply to an SME on the top rank, or you apply it to a micro company with less than 10 people, the impact is major. And so now that we're talking about economic impact, but in Brussels we're also talking about simplification, I believe that simplifying the life of those micro companies in the construction sector, but also in other sectors, might be another angle to see the problem, because if we want to simplify their life, cutting those 10 hours will be definitely a win.
Thank you. I think we can start answering. Who wants to start with?
I can start, because I think there were a couple of questions to which I can reply based on our work, particularly to Lina. So on your first point, so what the information that we get about access to finance and how it relates to late payment comes from a survey and from that survey we cannot go at sectoral level. Huh? So it may be that there are some sector specificities what we are not able to capture them. On your second point, it is true that most of the surveys bring in the perspective of the suppliers. Huh? So earlier this year, actually, we really tried to go beyond that, and we have been looking at CSRD, so the reporting of companies under this new directive, and there are some elements which are related to late payment, and really try to infer some behaviors. It's not very easy, because we are at the very beginning of the implementation of the directive, and the information is still limited, and it's really focusing on a relatively small and specific group of companies. But this is really something we want to look into more details. So if the directive remains and we are able to collect this information.
We are in a situation in which the current legal framework is changing.
Yep.
So it's difficult also to say, but we focus the analysis on what is applicable now, because it's the companies. And also, I just wanted to add on this, the survey it's basically the structure of an SME panel. It's extended because it was distributed widely, but we didn't differentiate whether they were buyers or sellers.
Yes.
SMEs are operators, and it should also be taken into account that many associations answered to the survey. Yes. At least a quarter of the respondents were associations, and they counted as one, but still they bring a lot to the discussion.
Can I add one short
Just
thing?
wanted to answer to the question about basically the proposal is there. The Parliament took a first reading in 2024. It's there, so the legal process, what is called the ordinary legislative procedure, the technical name of the adoption process, requires that also the Council now has to take its position. So we cannot advance until this step is taken. So, as quoting Mrs. Ballarin, we hope that also Council engages and we can move forward.
Yeah.
Yes, Jesper, and then Jesper.
No, Anders.
Okay, I'll just. But I think it's an interesting. If you want to be a supplier of money to your customers, or if you actually want to work as a bank, if you say that there's regulations in the Basel Agreement. What kind of conditions should you have? What kind of credibility should you have? You want to borrow money to somebody else, and I think we need to kind of look at. I mean, it is an interesting thing. If I have that type of money, how can I actually do that to give that to? But I think there's a way to solve that if you want to be a financer of somebody else's business, and I think it's totally okay. But we can look probably into just that question, because if that solves the problem, then we don't have to look at how to solve it through the billing or to the other type of regulations.
Jesper. Thank you, Anders.
Yeah, just to our colleague from CPME, I think all eyes are on the Council now, and in a time where Europe is under immense pressure, both with our competitiveness and our resilience, it is long overdue that Council acts. It was in 23 that von der Leyen presented the SME relief package. I really understand the French position that the companies, they ask for something simple in return to all they do to society, where they deliver everyday jobs and investment. They need to be paid in time. So I think the landing pass will be some sort of a compromise, and I hope the Danish presidency in the remaining months will convey a working group in Council so we can get this matter up and working to deliver a good compromise. And I think it will not be a regulation, it will end up with a directive. But I think status quo is not acceptable. We need to act now. Thank you.
Thank you very much. Unfortunately, we have to close, but I would like to thank Anders, Jesper, Cinzia for the discussion, and also the participants for your questions and your presence. And see you next year for the new annual report. Thank you very much. Thank you.
Thank you.
Thank you.